5 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. President Trump set to announce his Fed chair pick. Stocks and bonds drop on bets that Kevin Warsh will get the job. And a partial government shutdown looms even as the president and Senate Democrats reach a tentative deal, plus a record quarter for Apple. Shares now stabilizing after a jump as it warns of rising costs that we've all been wary of. Take a look at what's going on in terms of futures right now. S&P futures down about 1%, a little bit less than that at 69.30. We're looking at NASDAQ futures that are down a little bit more than 1% right now, and the small caps off 1.5. In terms of Treasuries, important to look, obviously, as we're talking about the Fed, what's going on with rates. Right now, the 2-year yield little changed at 355, 356. The 10-year yield coming up 3 basis points at 426, and the 30-year yield coming up 4 at 489. So a little bit of a steepening going on there. In terms of commodities, we've been watching very closely, of course, the dollar and its link to both Treasuries and commodities. Right now, the Bloomberg Dollar Index up about 0.5% at 1183 against its G10 peers. Gold right now down 6% and change, still over $5,000 a troy ounce. But yesterday we shot up through 5,500 and then came back down. Copper yesterday was over $14,000. Right now we're looking at 13 to 12. For some of the individual stocks that we're watching today, let's get over to Chloe Melee in London. Chloe?
Good morning, Matt. Sandisk is having a fantastic day today, as we can see here up on the screen, almost 20% after a blowout results that are really helping to extend this impressive rally that we've already seen in the shares. And this follows upbeat results from Seagate earlier this week and really confirms that momentum in computer hardware and storage stocks, which is, of course, being driven by AI. Moving on, and KLA, the chip company, has not been able to extend that rally in the same way. It actually reported results that were ahead of expectations, but only a little bit. And so because expectations were so high, this small beat was seen as a bit of a disappointment from investors. And analysts have also noted that the company is facing some supply constraints. And so we are down, actually quite impressively this morning, we're down 9% in pre-market trading. And finally, Deckers, the owner of Ugg boots and Hoka running shoes, is doing well. The sales were ahead of expectations. It raised its guidance. And analysts noted that the direct-to-consumer business was doing particularly well and that there was further room to grow for those flagship brands. And therefore, we are up also quite a lot this morning, up more than 13% for Deckers.
All right, Chloe, thanks very much. Chloe Melee there in London, looking at some of the single stock stories this morning. Coming up this hour, we speak with Michael Sneyd of BNP Paribas on the market reaction to Kevin Warsh as potential Fed. And let's talk about that right now as well. Listen to what President Trump said last night.
I'd rather say it tomorrow, but just an outstanding person and a person that won't be too surprising to people. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so.
So it's someone who was on your short list, sir?
On my reasonably short list, yeah.
Bloomberg's Michael McKee joins us now, and I guess the tell was when he said this person could have had the job a couple of years ago. So it has to be somebody, I guess, who was on the Fed before, or who was in the mix at least, right?
That was the first clue, yes, because in 2017, the president strongly considered appointing Kevin Warsh before he decided on Jay Powell. Warsh is 55 years old. He has been a Stanford graduate and a Harvard Law graduate. Started his career at Morgan Stanley before moving to the White House in 2002 to work for George W. Bush as an economic advisor on the National Economic Council. And then Bush appointed him to the Federal Reserve. In 2006, he stayed till 2011 when he quit because he objected to too much QE. He has some strengths that the markets will like. One is that he has monetary policy experience, and two, that he is very familiar with everybody on Wall Street. He's been working for Duquesne Capital Management since he left the Fed for Stan Druckenmiller. But there are questions. He's been a harsh Fed critic, and he has also been known as a big hawk, which is why, as Matt told you, the markets are reacting the way they are. However, hawks can change their feathers if the economic circumstances change, and it may be that the president is looking for something that goes beyond just monetary policy, because Warsh is ready to make some big changes to the Fed. He's spoken about this quite a bit in the last couple of years. He thinks the Fed should concentrate on inflation overall. And as I mentioned, he's a big critic of QE. He thinks the Fed should have a much smaller balance sheet. He's criticized the Fed for having mission creep, wants to get out of anything that doesn't have to do with keeping inflation down. And he thinks Fed officials over-communicate. He's also, and this is an interesting thing, Matt, you might want to keep an eye on bank stocks. He thinks the Fed may be better served by getting out of the business of regulating banks, let someone else do it. So for the markets and for the Fed, it's a known quantity with some unknown questions that they're going to have to get answers to before they really know how they're going to react to all this.
I think about all the things that are talked about as being important to President Trump. So Kevin Warsh, he looks the part. I don't know how tall he is. But I imagine he's a fairly tall guy. He married a lauder, apparently, and he worked in a sort of in the circle of George Soros, which seems to be something oddly that works for President Trump.
Well, I think it's probably less the background. Trump obviously likes the fact that Warsh has monetary policy experience, and it's less interest rates because they will come down if inflation comes down, and Warsh can say, I'll follow the inflation rules and maybe be more aggressive once inflation comes down. But it's the rest of it, the blowing up the Fed, the making a lot of changes in the way the Fed operates, that probably appeals to Donald Trump, the man who tore down the East Wing of the White House.
Well, and loyalty is a criteria that he's mentioned is incredibly important to him. So it'll be interesting to see how loyal Kevin Warsh can be compared to, say, Kevin Hassett.
Yeah, that's going to be a difference in the way the markets perceive all of this, because Hassett was seen as very, very loyal and probably putting Trump ahead of anything else. But Warsh could make the argument, and maybe it's because his personality is very strong with Trump, that we don't need to cut as much as you think we need to cut when we need to do it. And so the question then becomes for the markets is how do you read that in terms of where do you end up and how much independence does the Fed have? Warsh has argued for operational independence, but he's also said he's willing to work with the Treasury Department and come up with ways that they can cooperate for the good of the country.
All right, Mike McKee, thanks very much for covering that. Don't miss Mike's exclusive interview with Fed Governor Stephen Miron. That will be on the close today at 3 p.m. New York time. Sticking with Washington, President Trump and Senate Democrats have reached a tentative agreement to avoid a full government shutdown. Joining us now is Mika Solner of Bloomberg Government. So, Mika, what do we know or what do we hear is in this deal, and why won't it go into play right away?
Yeah, so President Trump and Senate Democrats last night reached this tentative deal. So essentially, they're planning to fund the government, the majority of agencies, for a full year, but only fund the Department of Homeland Security, DHS, for about 2 weeks while they still negotiate some of the immigration concerns that Democrats have laid out in the wake of the 2 deadly ICE shootings, the scrutiny on DHS Secretary Kristi Noem, and they're pushing for broad changes to some of the president's immigration policies when it comes to ICE in particular, including the banning masks for agents and introducing more search warrants. And some Republicans are actually on board with these too. So we're going to see what happens in the next 2 weeks when it comes to making some more permanent changes.
But this apparently will miss the funding deadline. So we will see a partial government shutdown, at least for a short time.
At least for a short time, likely over the weekend. So I think that overall, the majority of the impact is likely to be averted. If it depends on when the House can scramble back. It's unclear if they can rush back by Sunday. It's probably more likely to be Monday. But yes, it's going to surpass the Friday deadline.
I noticed that President Trump is suing the IRS. I think $10 billion is the number he settled on. And the IRS is important in the context of this government shutdown as well, because the Republicans really need these refunds to go out, right? This is a huge part of the big, beautiful bill stimulus.
Absolutely, and this is also part of the president's affordability agendas. He wants these tax benefits from the reconciliation bill to start going into effect, especially in the spring. This is something that Republicans have promised voters who have concerns, who have pocketbook issues concerns, and saying that the cost of living is too high. So they need that. But Trump's latest lawsuit is part of his escalation with the IRS. They've been very unhappy. It's one of the targeted agencies that they've had massive scrutiny on, especially after President Biden really included more workers in the agency, and the overhaul that the Trump administration has had on that.
Right, they definitely seem short-staffed now, and we, I guess, all need our refunds. The president is threatening to decertify planes out of Canada, to levy further tariffs on planes out of Canada because they didn't certify our Gulfstream jets?
Yeah, this is a new announcement from the president, and I think it's also in line with his escalating feud here with the Canadian Prime Minister, Mark Carney. And Trump is very invested still in imposing tariffs where he can while still trying to be cautious. And I think the Canadian airspace, it's really interesting to see the developments here and how that's going to play out. But I do think that this is also part of the president really trying to, make sure that he wants to kind of use his bully pulpit against Canada. So we're going to see, what happens.
Mika, thanks very much. Mika Solner there of Bloomberg Government out of Washington, D.C. Now to some of the other top stories trending on the Bloomberg terminal this morning. India's probe into last year's Boeing 787 crash is increasingly focusing on deliberate pilot action as the probable cause. Authorities had previously been resistant to that scenario. Sources say investigators have ruled out mechanical failure and have not found evidence of sabotage. A final report on the Dreamliner crash is due by June. Ryan Reynolds' soccer club Wrexham has been caught up in the collapse of UK brokerage Argentex. The club had placed $6.3 million with Argentex. The firm entered a form of insolvency in July due to a soured foreign exchange trade. Wrexham used Argentex for basic FX services. And China is mulling the sale of hundreds of billions of yuan in special government bonds to recapitalize some of its largest insurers. The sale would raise about $29 billion to help recapitalize the insurers, including China Life Insurance Group and China Taiping Insurance Group. It would be the first time Beijing has used special bonds to inject capital into its insurers. Coming up, Apple's big beat on revenue, overshadowed by a warning of rising costs. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Shares of Apple pairing post-earnings gains as the iPhone maker's record sales are clouded by fears of rising costs. Joining us now is Tom McKenzie, host of Bloomberg Tech out of Europe. And Tom, first of all, it was a big beat and just massive revenue. I mean, the installed base for the iPhone is like $2.5 billion now.
Yeah.
These numbers, I mean, I heard Mark Gurman commenting overnight. These numbers really impressed.
Incredible, a record quarter. And look, as you know, Matt, this is before the iPhone 17 really has full AI capabilities embedded. They hope, of course, that's going to be a 2026 story for them with that Gemini partnership around Alphabet. So we'll see if AI is a turbo boost for Apple in the second half of this year. But you're right, on the quarter, really significant sales, and particularly in the Chinese market, a turnaround for Apple. So important, of course. Revenues up 38%, and the guidance to the current quarter very strong as well. So they see revenues increasing or sales increasing between 13 to 16%. So that's above the estimates as well. So on all those fronts, Matt, to your point, very strong. But really interesting is what Tim Cook had to say about the margin, the potential margin squeeze going forward as a result of those higher input costs, notably, of course, chip costs. And we've been spending a lot of time looking at the likes of SK Hynix and Samsung, and executives from those companies have talked about the fact they need to build out more capacity because they're so constrained in being able to meet that demand for memory chips that have been hoovered up by the data centers. Electronics prices essentially are going to be going up. Is that inflationary? Certainly, Tim Cook thinks it could be a squeeze on margins going forward for Apple.
Yeah, but this isn't something for which we were unprepared, right? I mean, yesterday before Apple's earnings came out, I was reading a preview that said, look, it's going to be great numbers, but we're really worried about costs. Yeah. So investors knew about this ahead of time. We know how expensive memory is, for example. And in fact, year to date, the shares are down 5%.
Yeah, not a huge surprise. Absolutely. To your point, it was in the preview leading up to the results that this could be a constraint. They're facing other supply chain issues around the 3-nanometer chips and also some of their AirPods as well. So you layer that all together and maybe there's additional concern. The wearables slowed a little bit. The Macs were a little bit weaker. Services came very strong, though. That was an increase of 30%. So it was a bit of a mixed picture when you lift the hood. Not a big surprise, as you say, that components are becoming more expensive. How Apple mitigates that, to what extent they have the resilience. They've been very effective, of course, at kind of offsetting, to a large extent, the tariff impact. So we'll see. And again, I think the future for Apple is going to be how well they execute on the AI side. But for now, there does seem to be caution, though, about the cost impact, at least from some investors out there when it comes to Apple.
Speaking of not a huge surprise, Elon Musk's SpaceX is reportedly considering a merger with Tesla and or XAI. And to me, this is very much no duh, because his $1 trillion pay package requires Elon Musk to get Tesla to a market cap of $8.5 trillion. And how much easier would that be if he folds in all of his other assets to Tesla? Yeah,
and what are we, close to $1.5 trillion right now for Tesla?
There's a long way to go, yes.
Tesla as an auto company. So to your point, look, a lot of investors have been pushing for this, Matt. You know that, of course, a combination between Tesla and SpaceX as they lead up for that potential SpaceX IPO in June. What it could mean in terms of the broader ambitions for Elon Musk to get data centers into space, the energy storage part of the business that Tesla, of course, excels at, and how that could benefit the data centers in terms of that future story for Elon Musk. The other combination, of course, is that you do SpaceX plus XAI, and then you get the combination of data centers powering XAI. But the bottom line is he is looking at some kind of formation, some kind of combination of these businesses to supercharge those prospects and that future bet as he looks potentially to that huge, mega, potentially record IPO towards the back end of this year.
All right, Tom, thanks very much for your coverage. Bloomberg's Tom McKenzie, anchor of Bloomberg Tech out of London. We'll be covering this story on even the non-tech shows for you all day long. Coming up, Kevin Warsh on the cover of most major newspapers. We'll look at the headline stories across your front pages next. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. New York City Mayor Zohran Mamdani says the city's relationship with the state and wealthy corporations has to change. He spoke on Bloomberg Balance of Power with Miles Miller.
The city's relationship with its wealthiest residents, most profitable corporations also has to change so that we can bring this city back to firm financial footing. You know, as the mayor, I am legally required to balance the budget of this fiscal year and the next. That is something we are fully going to do. In order to do so, we have to deal with these structural problems.
You spoke about Eric Adams and Governor Andrew Cuomo, former Governor Andrew Cuomo. Where does the city council lay blame? State legislature? You didn't say anything about Donald Trump, who was president during some of this period of sort of instability as well.
I think there's no question that we are talking about a city's fiscal health also in the context of threatened cuts coming from the federal administration. Those are cuts that we're going to fight with every single tool in our toolbox. However, the $12 billion fiscal deficit, when it comes to the architects of that deficit, we're talking about the former mayor and the former governor. The reason for this is that the former mayor would under budget the costs of actual city services. We're talking about when it comes to access to shelter, or we're talking about cash assistance, sometimes even only budgeting half of the cost, or 60% of the cost. And then here we are seeing a deficit grow to a level we haven't seen before. And amidst all of that, adding close to $2 billion in new expenses. That's the kind of gross fiscal mismanagement that we're talking about.
I want to, you talked a little bit about, the potential of these cuts. Mm-hmm. Saturday is the day where President Trump said sanctuary cities who don't change their policies could see cuts. Federal aid is about $8 to $10 billion annually for the city. What kind of conversations have you been having either with Washington, the White House, or here at City Hall about what the potential of those cuts could be come Saturday?
Well, I think we make very clear that our laws and our values are not bargaining chips. We are proud of what we have here in place in New York City. We will defend it, and we will defend New Yorkers. And look, the president said after our meeting in the Oval Office that the better New York does, the happier he is. And my job as the mayor of New York City is to make clear what these kinds of proposed cuts would do to this city that we both love. They would devastate this city. And so we're going to fight those kinds of threats. And also to make very clear that we have to prepare for every single eventuality, which is why it's so critical to not just turn to all of your reserves and say we can use this for one fiscal deficit if you know that the horizon is one that includes threats of this nature. You have to put yourself on a firm financial footing and ensure that you have the kind of reserves to prepare for a day like this.
That was New York City Mayor Zohran Mamdani speaking with Bloomberg's Miles Miller on balance of power. Time now for your front page news. One story really making the headlines across all of the major news outlets we follow for you. President Trump's announcement of his Fed chair pick. It's widely expected to be Kevin Warsh, and he's expected to make his choice known later this morning. Warsh is a former Fed governor. He visited the White House yesterday, and sources caution that the selection is not final until the president makes the formal announcement, but there was a tell in his comments last night. Coming up, we'll catch up with Michael Sneyd of BNP Paribas. This is Bloomberg. It is 5:30 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. President Trump set to announce his Fed chair pick. Stocks and bonds drop on bets it will be Kevin Warsh. And a partial government shutdown looms, even if only for a short time, because the president and Senate Democrats reportedly have reached a tentative deal. And a record quarter for Apple. Shares are now stabilizing after a jump as it warns of the rising costs that we really, to be fair, had been expecting. Take a look at what's going on in markets right now. You can see that S&P futures are down 0.9%. NASDAQ futures a little more than 1%, and Russell futures approaching a 1.5% drop. So some consolidation, as market players would say. You can see that we're looking at a little bit of a curve steepening here. The 2-year yield, although little changed, is coming down slightly at 3.55. The 10-year yield up 2 basis points at 4.25, and the 30-year yield coming up 3 basis points at 4.88. In terms of the dollar and gold, we see the Bloomberg Dollar Index climbing back higher again against its G10 peers right now, up at 11.82. The gold price coming down, although still over $5,000 a troy ounce at 5,055, off another 6% today after the wild swings that we saw yesterday. And copper as well. Yesterday at one point up over $14,000, now back down to 13,230. For some of the individual stocks that we're watching this morning, let's get over to Chloe Melee in London. Chloe?
Good morning, Matt. Sandisk is doing very well this morning, up almost to 20% after blowout results that are helping to extend the really impressive rally that we've seen in those shares over the last few months. This comes just a couple of days after really good results as well from Seagate. And so this confirms this momentum that we have seen in those computer hardware and storage stocks, which of course are benefiting greatly from this AI boom. And we are up, yes, about 19% for Sandisk this morning. Moving on to miners, and they are in the red this morning as the market is digesting the news that Kevin Warsh is likely to become the new Fed chair. This is a pick that is seen as quite hawkish, and that has boosted the dollar but sent silver and gold tumbling, and therefore we are seeing that reflected in those shares for precious metals miners in pre-market trading. And finally, Deckers Outdoor, which is the owner of UGG boots and Hoka running shoes, has reported earnings that came in ahead of expectations. It also raised its guidance, and so it's up quite strongly this morning, about 13%. And analysts have said that its flagship brands have got further to grow, further to go, and therefore we are up very strongly this morning.
Chloe, thanks very much. Chloe Melee there talking you through some of the big movers today. Investors are awaiting the president's announcement of his pick for Fed chair this morning. For more on the market disruption that we're watching right now, we're joined by Michael Sneyd of BNP Paribas. And I guess, in some ways, it's a continuation of what we saw yesterday, Michael. After a brief bump, equities were down, and after a big jump, we saw gold and copper come back down as well. You think this all has to do with the expectation of an incoming Kevin Warsh?
Good morning to you, Matt. So I think first thing to say is that, January has been a really remarkable month for asset performance. We've had some large moves, and it's quite natural as you go into the end of the month to see, in a period of higher uncertainty, to see a bit of consolidation. So I think if we can, one aspect, look at the markets through that angle. In terms of news on the Fed chair, which we'll find confirmed by Trump later today, it's not for me to kind of comment on individual nominees. But one thing I will say is that our view is that regardless of who is the new chair of the Fed, we think that Fed policy is going to continue to be determined by the economic outlook and the Fed's existing policy goals. And when you look at the economic outlook, that is strong, that we think warrants no further cuts from the Fed this year.
So you're not concerned that we won't get any more cuts? I mean, I guess that had been kind of priced out. We've seen the terminal rate float higher, and we're not, to be fair, seeing big problems in labor when we watch the Thursday jobless claims numbers.
That's right. And also when we think about data over the coming months, our models are telling us the data is likely to continue to get a bit better. And that's because you've got this kind of loosening of financial conditions occurring, feed through to being supportive for the economy. And then this is against the backdrop, as you say, Matt, that the market has already priced out kind of near-term rate cuts from the Fed, continues to price in a rate cut bias. And we think that's right, given the balance of risks. And actually, we do think that for investors who do want to look for some protection for if you do get some kind of downside risks formulate to the economy, then actually having positions that take benefit that rate cuts could get further priced in is a way of putting on some form of hedge inside the portfolio.
We just were watching Chloe Melee highlight SanDisk up another 19%. And, there's been a real concern about software lately. I noticed, unless there's a misprint here, you favor long U.S. software versus semiconductors. Is that a contrarian play?
It is quite a contrarian play. If you look over the last 4 months, you've had software tech really underperform semiconductors. And that's really as the market has started to question the ability for software companies to deliver returns against a backdrop where demand for data centers still remains very strong. Now, when we look at valuations, both in terms of kind of short-term technical valuations and also more medium-term valuations based on earnings, the software sector does appear to be pricing in quite a substantial discount. So we do favor looking to kind of fade the moves that we've seen play out, not just the last 3 months, but also particularly the last few days.
I see that that you favor a short copper play as well, which is also quite contrarian. I wonder, do you see parallels to, the rush to build out AI data centers now and the rush to lay fiber in the late 90s, early 2000s at the dawn of the internet?
Yes, maybe with the short copper, just to take a step back in terms of the context of I think, a challenge for investors at the moment. Our base case is pro-risk given the outlook for the economy. But a challenge that investors have is where can they add some defense to their portfolio? And where copper stands out to us as having been attractive is that because it's tied to the data center build-out story, as you say, Matt, then if you do get downside risk to that story, copper looks very elevated with those expectations leading to lower price action. So it's one of those trades where we think investors should consider putting it in their books. But the view that we have is that copper is very much to be considered kind of a tail risk position rather than a core risk position.
Interesting. And the concern about investing far too much money in a build out too fast, the likes of which we saw with all of the fiber companies and something like Cisco in the early 2000s. Do you see that playing out again here in the AI age?
So when we look at the data center demand, we see it as being very strong. Where we see actually one of the risks to the build out of data centers is not so much in the demand, but in the ability for energy to be supplied to the data centers. So because of the large amount of electricity that data centers use, there's likely to be constraints in power creation and also power transmission. And we think that's part of the economy where we need to see more investment in order for the data center cycle to continue to grow at the kind of rate that we're seeing get priced in at the moment.
I want to finally ask you about the dollar, Michael. Obviously, today's moves may be tied to speculation on a Fed chair pick, although I don't see how you can really know what's going to happen yet. We've seen a trend over the, especially the past week, but over the past year in dollar weakness. And we're down at a 4-year low. Do you think that continues?
So we do like seeing particularly euro-dollar higher. We have a target of 122, so just a bit higher from where we are now. And that's because when we look at some of the kind of technical flows that could go through the market, we think that this can continue to lead to dollar selling. So particularly from kind of real money accounts, real money investors who might be altering their hedge ratios, but also from systematic accounts. As a quant, I look a lot at the way that systematic accounts are trading and where their flows could have a particular impact on the market. And euro dollar at the moment is one of those that, because it's kind of broken out of a range recently, we're likely to see further buying flows from systematics that can perpetuate the dollar weakness trend for a little bit longer.
All right. Great to have you on, Michael. Really appreciate your time this morning. Michael Sneyd there of BNP Paribas, where he's head of cross-asset and macro quant strategy. Let's get to the other top stories trending on the Bloomberg terminal this morning. India's probe into last year's Boeing 787 crash is increasingly focusing on deliberate pilot action as the probable cause. Authorities previously had been resistant to that scenario, but sources say investigators have ruled out mechanical failure and have not found evidence of sabotage. A final report is due by June. And Ryan Reynolds' soccer club, Wrexham AC, has been caught up in the collapse of UK brokerage Argentex. The club had placed $6.3 million with the firm. Argentex entered a form of insolvency in July due to soured foreign exchange bets. Wrexham used Argentex for basic FX services. And Ukraine is ready to halt strikes on energy infrastructure if Russia agrees to abide by a U.S. proposal for a week-long truce. President Zelensky said that Ukraine wants to end the war and is ready for de-escalation. So far, the Kremlin hasn't confirmed an agreement to halt missile and drone attacks that have devastated energy infrastructure in Ukraine. Coming up, another government shutdown looms. We discuss whether the tentative deal will make today's deadline. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. President Trump and Senate Democrats have reached a tentative deal just ahead of the Friday deadline. Back with us now in Washington is Mika Solner of Bloomberg Government. And, you know, Mika teased that we would tell viewers whether or not this deal will be ready in time. We don't think it will. Isn't that right?
That's right. So we are likely heading into a very short government shutdown, but it's unlikely to have a huge impact on federal agencies because this is likely to get resolved by Monday. House Speaker Mike Johnson is scrambling to get his members back in town, maybe even by Sunday, but it's more likely going to be at the start of next week and then going to get resolved here as Senate Democrats push for more changes to immigration reform. That's the big holdup here that started this fight in wake of the deadly ICE shootings.
So what do we know about this deal with regards to ICE? Are they going to get some training, have to wear uniforms, maybe lose the masks?
Well, we're seeing a bipartisan push here from Senate Democrats, particularly, also a handful of Republicans who are saying there should be some changes into the way that Border Patrol and ICE agents in particular are operating. And it's led to 2 deadly shootings of protesters in the same city in the span of weeks. So I think that's really concerning for a lot of lawmakers. But they're pushing for banning masks. They're pushing for increased warrants. Some are pushing for, just more accountability in that aspect. But I think it's more so just, really restricting some of the way that they're operating right now, which has led to a lot of public concern.
In terms of new tariff threats, they seem to, come often and with vigor. President Trump now saying he's going to put tariffs on Canadian planes and decertify Bombardier products if they don't change the way they certify our Gulf streams.
Yeah, it's certainly interesting, and it's going to be legally questionable to see if President Trump even has the authority to do this, when it comes to the tariff war he's having with Canada. But I think it also shows the escalation that and the frustration that the president has had with Canadian Prime Minister Mark Carney and in this tariff war between the U.S. and Canada. I mean, we saw that the president was really upset about an ad put out in Canada, saying that Reagan wasn't for tariffs. And I think that's still a really sore spot for him as this infighting between the U.S. and Canada continues.
We had news that President Trump is going to sue the IRS. The $10 billion figure, not as shocking considering his other recent lawsuits. But this is interesting because he essentially runs this agency now.
Yeah, absolutely. It's fascinating to see the administration really continue to go after the IRS. That they are soon to issue. It's tax season's coming up, and I know that they want to see some of these benefits that they're saying is going to happen for a lot of Americans from the One Big Beautiful Bill, the reconciliation package passed by Congress last year. So Republicans are really banking on that for a political win. So they want to make sure that the IRS is in line with that, but also I know that the president has had a sore spot with that agency. That's definitely one of the biggest targets of DOGE and some of the government funding cuts, layoffs that we've seen from the Trump administration.
All right, Mika, thanks very much. Mika Solner there of Bloomberg Government out of Washington, D.C. Let's turn to tech now. Shares of Apple a bit lower in the pre-market rate right now following record quarterly sales as well as an upbeat forecast. The CEO, Tim Cook, warned, however, quote, "We do continue to see market pricing for memory increasing significantly." He also added that the firm is facing unrelated supply chain constraints. Joining us now is Bloomberg's Neil Campling. And Neil, this wasn't unexpected, right? I mean, we've seen memory chip prices soar. That's why something like SanDisk is surging in terms of stock price. But I guess investors hadn't completely priced in that expectation?
I think, the aftermarket move is not significant. And actually, if you look at the history, Apple only tends to move 3% up or down on the day after earnings itself. So I think the price action isn't particularly alarming, especially compared to some of the volatility we saw in yesterday's market. But there is that unknown question on the memory pricing. And I think it's more about supply than it is about pricing, because if we take a step back and look at Apple's gross margins, they are actually indicating a higher gross margin for the following quarter, and already having super robust margins. And I think the other aspect to this is the likelihood is that we as consumers are going to weigh out any cost increase. Apple have got significant pricing power and can put that through in the iPhone ASPs itself. But clearly, as you mentioned, SanDisk themselves last night, their guidance is absolutely blowout, 400% above street consensus estimates for next quarter. So you're seeing that memory and those constraints and pricing going through the roof, really impacting with demand from AI, of course, coming through in the supply chain aspect. But Apple's numbers themselves were very solid, and they're guiding to the best revenue growth number for a March quarter since 2021, which is pretty stellar.
I want to quickly touch on the SpaceX Tesla merger story. I don't think it's at all a surprise because Elon Musk needs to get Tesla to an $8.5 trillion market cap. So obviously he's going to try and fold in all of his other assets. But I guess the news is that we now know they're talking about it.
Yeah, and I think that is the news, and actually maybe the shiny toy of the EVs are having some struggles, and you're seeing obviously some of the legacy models being mothballed actually going forward. What's interesting is that with $1.5 trillion of market cap talked about for SpaceX, the combined company, in theory, would have over $3 trillion of market cap already. And of course, that would actually propel Tesla as a combined entity to the top 5 of S&P market cap companies. Consider this, that combination would be a bigger company than Amazon or Meta, which is pretty astounding.
Neil, great having you on the program. Thanks so much for joining us. Bloomberg's Neil Campling covers technology for us at the business of technology out of London. Let's turn to oil right now. Chevron and Exxon set to report before the market open. Bloomberg's James Herron joins us now for more. We see these shares down in the pre-market. And we actually have seen a pretty decent spike in the underlying commodity, James. What should we expect, although that was obviously the last couple of days, what should we expect from these companies in terms of the last quarter's performance?
Yeah, well, obviously, last quarter oil prices were fairly weak. They've been declining a lot on expectations that the world is moving into a surplus. So that's going to weigh on Exxon and Chevron's earnings. But as you say, the picture has changed in the last few days with the possibility of a clash between the US and Iran, which could affect supplies from the Persian Gulf. So yeah, but overall, we're looking at a slightly weaker picture for the fourth quarter at least.
So in terms of the outlook, James, and that's obviously what investors tend to latch onto if they get one, what should we expect, and how forthright will these companies be with us?
Well, obviously, a big talking point for investors, and I want to hear from the CEOs about this, is their intentions in Venezuela. We were seeing some big developments just yesterday with the country changing its laws to make it easier for American oil companies to invest there. Chevron operates in the country and has expressed some interest in doing more, whereas we all know now that the Exxon CEO, when he went to the meeting at the White House, said Venezuela was uninvestable. And that didn't make Trump very happy. So certainly people will be watching out for if there's any change in signals, particularly from Exxon when it comes to their intentions about Venezuela.
James, thanks very much. Look forward to your reporting. Bloomberg's James Herron there talking about the majors reporting today. Coming up, we're going to get you set up for the rest of your trading day with more earnings to come and Fed speak and, well, maybe a Fed chair pick as well. This is Bloomberg. Take a look at what's ahead today. First up, as we were saying, Exxon and Chevron will report, but so will American Express before the bell. So pay attention to that. Plus, U.S. PPI comes out at 8:30 a.m. Eastern. So we will see, at least on the producer level, some inflation data. And Fed speak today on the docket with St. Louis Fed President Musalem and Fed Vice Chair for Supervision Bowman, both on deck. In terms of the individual stock movers that we're watching, well, SanDisk, almost a 20% jump in the pre-market after strong second quarter results. Deckers Outdoor gaining 14%. The owner of UGG and Hoka Footwear raising its forecast, and Newmont Precious Metal down with the drop in gold and silver. In terms of the Fed chair pick, we could see President Trump announce Kevin Warsh today. You see some steepening there with the 2-year yield down, the 10-year yield up, and the dollar gaining a little bit more strength against its G10 peers. That's it for Bloomberg. Surveillance is ahead. This is The Brief.